Hello viewers, welcome back to our channel. We are now looking at financial management, and this is lecture number 2. In our last video lecture, we should have covered all about the introduction, the finance function, and the environment, or what we call the business environment. But we were left with various topics, like we are left with the various forms of business organizations. We didn't talk about the business environment. We didn't talk about the goals of the firm. So those are some areas that we didn't talk about, which are also examinable. So these are also examinable areas. We should have completed them, but the issue wasn't to complete the whole introductory part, but we were supposed to analyze and understand certain things. So these areas, of course, we also have the agency theory and other things that we didn't talk about. So those areas, those are the ones I want to start with for today. So these 3 areas, they are the ones that I want to start with. So when we are done with those areas, finally we can conclude with the agency theory. We can also look at the profit maximization versus the wealth maximization. That's also within the goal of the firm, if at all we happen to get to that point. However, if we don't cover all of these areas, if we don't cover these sections, all these sections, it's also okay. Because the issue here is to actually understand. So if we don't conclude them, we shall look at them in the next lecture. Because the point here is to understand the theory. Because this theory, we need to understand it very well before we start the calculations. Remember, the calculations, we start the calculations from the essential concepts. That's where we start the computations. Some small initial computations, essential concepts of finance. But before that, we have to look at the agency theory, we look at the ethics, because those are the things that we need to look at and we understand, and we make sure that we read at least every day. We give it like 15 minutes for this theory, because by the time we proceed to other areas, it will be very hard for you to come back to these small areas that we started with. So it is very important. Therefore, it is very important for you to understand the initial computations. And we say the initial computations are going to be in the essential concepts of finance. That's where we are going to be having the initial calculations of financial management. However, as I said, you should be able to download the course materials, the training guideline, can call it the training guide or the plan, and make sure you also pay attention to the past papers. They are also very key because they are past papers in our Telegram channel, but we say they are those that we link on our training guide. We make sure that we link or we reference each lecture or each lesson, and you'll be able to look for those past paper numbers that we keep on referencing on each topics that we go through. So we want to see how they are examined, and that's why I guided you that you should be able to download the question bank, or you download either the soft copy or you buy, because you can download these papers as long as you can download them from the institute website. You log in, then you start downloading the papers, and of course, as you download them, the question papers, you also download the marking guides. Although some marking guides you may find when they have some errors, but those we shall be able to highlight them as we keep on proceeding. So you can get those from the Institute of Certified Public Accountant of Uganda website, or you can download them from our Telegram channel with the link that is provided in the About section of this YouTube channel. And by now, you should have downloaded them. So I believe that everyone should keep in touch with past papers, and that's the only way we can understand that we have got the concepts from the different topics that we've discussed. However, by the end of today, you'll be able to answer the homework that I gave you, because we started with the homework and we had two questions. We had the two questions. It's the one that we started with, because homework number 2 is involving some technical aspects that we need to understand. So what I only request you is you listen to my arguments today, but as I said in the first lecture, that you need to have the tools ready. You need to be having your calculator and also know how to use it, because it's not important for you to have the calculator but you can't even use it. But we shall give some guidance, especially when we are doing some computations. So, because in the next lecture, we may actually start looking at our initial calculations, and you need to have the tools ready since we have already started. So, the other key thing that I need to emphasize here is that you at least give yourself, if you just give yourself 15 to 20 minutes every day to go through the theory that we've covered, and make sure that you limit yourself to what we've covered only. Even if for a day you just read something to do with the roles of a finance manager and you know how to explain them, it's okay. Because by the time we start off the calculations, it will be hard for you to start reading the theories, because things are going to be a little bit many for you. By the time we go to the computations, you'll find yourself focusing on calculations and you forget the theory. But if you give yourself time to at least 20 minutes, maybe 20 minutes in the morning, 20 minutes in the evening before you go to sleep, you read something for only just give yourself 20 minutes. We shall keep on adjusting the time as we proceed with our tutorials. So basically that's what I wanted to talk about. Let's now try to focus on the forms. This is where we ended last time. Let's look at the forms of business organization. Business organization. Now, you covered this under business law on level 1. There is a paper for business law. You must have covered the forms of business organizations. But we also cover the same thing here. And this is another area where we can get some good marks if at all it has been examined. This is where we can get some good marks. So you can start a business, you can be a sole proprietor, or you can be a partnership, or you can be a company. And the company, for financial management, we call them corporations. So those are the ones I'm calling corporations. Therefore, your examiner expects you to understand these items, because tomorrow you are going to start your own company. You are going to start your own business. And you can't survive unless it's registered. And I hope that makes sense. However, in this case, we are not talking about cooperatives. Here we are not talking about cooperatives. Because the cooperatives, they are going to be registered under a different law. We have a different law for cooperatives. But if you are going to start your own business, then you will not be able to start it as a cooperative. Because a cooperative means, co means together. Then you are operating. There are very many people that you are coming with. But if you are starting your own business as a single person, then it's supposed to be registered in these 3 categories. Therefore, the examiner expects you to know these 3 businesses as we've explained them. So, having seen those, then we are going to look at each of these categories. We'll look at the sole proprietor, we'll look at the partnership, we'll look at the corporations or companies. We are going to look at each of them in detail. So let's start off with the sole proprietor. sole proprietor, or what we call a sole trader. So we need to understand who is a sole proprietor. The examiner can ask you the features of a sole proprietorship. And you find that he has given it maybe, let's say, 4 marks. But we are saying that a sole proprietor is an individual carrying on business with the view of making profits. So that's who a sole proprietor is. So you start your own business, like let's say a retail shop, with an aim of making profits, whether you sell products online or you do physical shop visit by customers. But the goal is actually to make profits and nothing else. So, however, the examiner will not ask you to define who a sole proprietor is. Meaning, he will not ask you for the definition of a sole proprietorship, but he can ask you for the features, as we said. So, let's try to look at some features. Features of a sole proprietorship. Now, here you should never forget that it's a one person owned business. It's a one-time owned business. So the business is owned by one person, and that's all in terms of the ownership. So there is nothing that you are going to explain from this point, because if the business is owned by one person, that's okay. The other explanation you may say it is either going to be a female or a male, that's it. But it is one person only business. Number two, the owner and the business, the owner and the business are legally fused, whereby you can't separate the owner from the business. In other words, the business and the owner, they are legally seen as one person. They are inseparable. In other words, the business and the owner, they are one person. When the owner is there, then the business is also there. When it's not there, then the business is also not there. That's what we call they are legally fused. Number three, the life of the business, its life depends on the life of the owner. So it has a life as long as the owner lives. And the owner may actually live, but he doesn't decide to actually run the business. So the life depends on the life of the owner and the decision to run the business. In other words, his decision to run the business, because he can be there, but the business is not there. So the life of the business depends on the life of the owner and his decision to run the business. If he decides to run the business, then the business will actually be there. Next is that it's more preferred. It's a more preferred form of business. It's more preferred because it is easy to form and run. Because there are going to be less procedures that you are going to follow when you are forming a sole proprietorship. And even running the business as a sole proprietor is very easy, because there are certain things that you are not going to look at. There are some taxes that you are not going to pay. Because if it is income tax, you can't pay income tax if you are a sole proprietor. There are some provisions that you are going to be paying in terms of tax. So you are excluded from some taxes. So that's why it is a more preferred form of business. So that's all that we can talk about here for the features. But we need to see if there are advantages of operating a sole proprietorship business, because the examiner will ask you on the same thing. So let's try to look at the advantages of sole proprietorship. One, it's easy to form. That's an advantage. And dissolve. So if you want to start, let's say you want to start a washing bay as a sole proprietor, you can start it straight away, because there are very limited formalities or procedures that you are going to follow. And at the same time, maybe after 3 months, you can say, I'm not making any money. Then you can decide to dissolve it and close it out. So it is easy to form and dissolve, because even dissolving doesn't include so many procedures like the company has. Now, the second thing, in most cases, there are low startup costs. Low startup costs. You don't need to have a lot of money for you to start a sole proprietorship business. You can start it with whatever you have, because you don't need to hire experts. Like for the company, you have to go through the registration procedures, and you may actually hire consultants or lawyers to form the business. But here you don't need to hire experts. And even those operational overheads, they are not actually there. So you can start it when you can. The other advantage is that you own all the profits. The sole proprietor enjoys all the profits alone. So that's self-explanatory. So the other one, it requires sole proprietorship are subject to less or fewer regulations. I'm not saying there are no regulations. They are there, but they are few as compared to companies. So those may be the advantages, but we need also to look at the other side, whether there are disadvantages. And of course, there are disadvantages. They are obvious. They are there. So we need to see the disadvantages. Of sole businesses or sole proprietorship. One, there is a limited lifespan. So as long as the owner lives and decides to run the business, then the business will be there. And if the owner dies, then the business will also die. So it is limited. There is a limited lifespan. The other one is low levels of working capital or capital. Since it is a sole trader or it is a sole proprietorship business, it will be the sole proprietor who puts in the capital. And if he has less money or less capital, then he's going to have a lesser business, because it will always depend on what the person who is starting the business has. The other one we can look at is that the owner or the sole proprietor suffers the loss by themselves. It's the same way they suffer the losses. So that's what we call, or that's what we wanted to look at as far as sole proprietorship is concerned. So let's now try to look at partnerships. Now, for partnerships, this is always a situation where two professionals, two or more professionals, or two professionals or many more entrepreneurs come together and they start a business. Remember, a business is anything that you do with an aim of making profits. So the examiner expects you to know what are partnerships. And when you're explaining that, you need maybe to give some examples. Some examples that we may look at Ernst and Young. Ernst and Young. These are audit firms, and these are partners, Ernst and Young. So the other we may look at is KPMG. These are also audit firms, and these are also individuals who came together and they started these auditing firms. However, those people, they may not actually be available as of now, because these companies, they started long ago. They must have maybe died, but the other behind aspect is that there must be documents that they left behind on how they can run these audit firms and how they can keep on opening branches in different countries, and the general way of how these entities are going to be run. So these partnerships, they started long ago. The KPMG, Ernst and Young, but you are seeing they have dominated the industry. So the examiner expects you to know what a partnership is. He expects to be knowing the advantages and the disadvantages, or the demerits of partnership as a business. He also expects you to know the features of partnership business. So we can start by looking at the features. Features of partnership business. Now, one is that owners are not distinct. Are not distinct. From their business. So in other words, a contract entered by one party on behalf of the other binds all the partners. So this area is very important because the examiner can throw a 5-mark question here on the features. Because most of the times you find that these are going to actually come together and they start working. Maybe they are professionals, everyone is specialized in different aspects, but a contract that has been entered by one person on behalf of the partner or on the partners, it is going to bind all of them. So that's why they are not different from the business. Normally, they are governed by a written document. that we call the partnership deed. It's an agreement, a written agreement. And there are many other features that you can read on your own. So some of these features, we just highlight them. So you may also find that they are supposed to, because this agreement is going to be showing how they are going to be sharing the profits they have made. They are going to find if they have misunderstandings, how can they resolve them? So those are all going to be within the partnership deed. And the partnership deed is very important because gathering people of different, maybe they have different professionals and they are going to be starting to work together. You need to have, you have to be careful on when you are making these agreements, because they are the ones that are going to be resolving certain conflicts if at all they arise in the future. So there are other aspects that you may look at in terms of the features, but now let's look at the advantages. Of partnership. Number one, we have what we call synergy. If you say that the two companies or the two entrepreneurs or the two people have become one, then it means everyone is going to pool resources and that's going to increase the performance of the company. And that's what we call synergy. Because you can pool resources and these resources, they may be including, they may be in terms of skills, it may be in terms of capital, it may be in terms of any other technical knowledge that you may be having. So you pool skills, and if that happens, then we are going to have what we call a partnership business. So a synergy is that extra advantage you've gotten as operating as an individual. So if you become to many people, it means even resource allocations are going to actually be very easy. Even allocating for jobs, you do something called specialization of labor. Everyone is going to be doing exactly what they know best. So that's going to improve on the overall performance of the organization. And that's what we call synergy. So it is as a result of synergy. So number two, the partnership can be cost effective, as each partner is going to specialize in a certain area where maybe one could be an expert. Because you may find that they are going to be maybe, let's say, three people. One is an expert, let's say, in strategy and consultancy. One is an expert in, let's say, auditing and accounting. And maybe the other is a specialist, maybe in IT. So you find that when you come together, you are going to form a very strong company, but everyone is going to be specializing in that area of their expertise. So you find that you are going to come together and form a business, and you do work related to those disciplines. Whereby if you get any job or any contract that is within the IT, it will be the IT expert to handle that docket. If it is in accounting and finance or auditing, you have a specialist there. So becomes very easy and cost effective. In other words, you don't need to hire more extra people to do the same work. You guys, you are experts in different fields, so you get very many contracts that are coming from different disciplines because you came together with people that are from different disciplines. So that's what we say, it is cost effective. Number 3, partnerships are easy to form. So it is easy to form. However, the considerable effort should be put into delivering or developing a partnership agreement at the point of formation. In other words, when forming a partnership deed, you need to have clear thoughts on who is going to be doing what, such that tomorrow, if you disagree, then things are easily sorted. And I hope that makes sense. The other one is losses and liabilities are shared. They are shared among the partners, and that's going to reduce the burden that is placed on an individual. Because if you have started a business alone, the risks and all the losses, liabilities, they are going to be bared by that one person who has actually started the business. But if you come together as very many people, you share the loss. And by sharing those losses and liabilities, it is going to reduce a burden from each individual. Now, we have another point here. Normally, partnerships don't pay. Partnerships don't pay tax. They don't pay income tax. In other words, if you have done some taxation, or if you have some taxation ideas, it is true that the partnerships, they don't pay taxes, but it is only the individual partners who file their individual returns, and they are the ones that are going to pay taxes. They are going to pay taxes on the money that they have earned from the partnership. So what the partnership will do, the partnership is only going to prepare the statements, and they reach at the point where they share the profits. So when they are sharing the profits, they distribute to each partner their portion, depending on how they share their profits and losses. And that's going to be taxed separated to the individuals. In other words, we are going to be using the individual tax rates to tax the individuals, but not the partnership itself. So those are some of the advantages. Let's now look at the disadvantages. The disadvantages of a partnership. Disadvantages of a partnership business. One, we have unlimited liability. Because here, the general partners are individuals that are going to be responsible for the obligations of the business. So the partners, they are individually responsible for the obligations of the business, thus creating partner risks. In other words, the individuals themselves, there is a risk for the obligations of the organizations. For example, if the partnership is unlimited, and maybe your partnership is, say, it has 10 million in assets, and that's your total assets or equity. It is 10 million. Now, if you go to the bank and borrow 30 million, because they can give you the 30 million even though the assets are going to be 10 million. And if it happens and this partnership is liquidated, and you find when your assets, you've sold all the assets and you only raised this kind of money, the 10 million, that's the amount you have raised from the sale of the company assets. But the loan was supposed to be for 30 million, or was 30 million. And that means you are going to personally raise the balance of the loan. So if the assets are 10 million, it means you have to look for the 20 million. It's these partners that are going to look for, they are going to raise that money personally. And that's what we mean by unlimited liability. So that's what we are meaning. Number two, partners may have difficulties in deciding on how they value each other's time. So there are those that are going to put in more time, in maybe more time and skills. They have done a lot of work. Maybe they have been available at the organization 24/7. They have been on the organization from Monday to whichever time they do the activities. So the whole week they have been available, but you find that they can't actually be rewarded as it should have been. Whereby you'll find that some partners will be, as I've said, will be working hard. They will put in all their efforts, and they may not be appropriately rewarded as per their inputs, and that's going to be frustrating to the partners, to that partner who has put in their best. So that's what we are meaning from that perspective, because it is going to be very hard. You find that they are going to be disagreeing on certain issues. Other partners are going to be working very hard, and others, they may not actually have a lot to do because they are going to be specialized in different disciplines. You may find that today we've received work or proposals or contracts from maybe one docket of expertise, and you find that that partner, maybe for the month, is the one who has been performing. The other dockets, maybe you've not been receiving contracts, maybe for IT, and you've received maybe for auditing and accounting. So you find that the person who is specializing in auditing is going to be having a lot of work to do, but these other partners, they are not. So it will be hard for them to be compensated as per their input. So that's what we wanted to look at as far as the partnerships are concerned. So now let's focus on corporations. Corporations or companies. Now, a company, they are regulated by Companies Act. Company or corporations. These are regulated by the Companies Act. Companies Act of 2012. And a company can be, as per the Act, it can be a public limited company, or it can be a private limited company. And you need to watch out for these two aspects, because there is when the examiner is going to try to ask for the differences between these two aspects. Now, if you are forming a company, we should know that the people forming a company are the ones that we call shareholders. These are the owners, and these are the people who are forming the company. Even if there are only 2 people or 3, so as long as the company is registered with the registrar of companies. However, in law, a corporation is treated as a separate entity. A corporation is treated as a separate entity. It is separate from the shareholders. Even though these shareholders, they are the ones who have started the business, they are separate. These are like, this is an artificial person, this is a human being. So it means, since it is a separate entity from the owner, then it means it can be sued. It can be sued, or it can sue. In its capacities, a corporation can sue or it can be sued in its individual capacities. Now, the examiner is going to be looking at some features of companies, of a company. Is going to look out for the difference between the public and the private company. They are going to look out for advantages and disadvantages of corporations. But what is very important here is we should understand the differences first. The differences between a public and a private limited company. That is very important, because that's where you need to be very careful, because those are going to be a little bit technical as per the Companies Act. Now, let's focus on the because I know the features, those ones you can actually get them. But let's focus on the differences. The first difference, we are going to categorize these as according to certain criteria. So on membership, we are going to look at a difference, but basing on the membership. Now, membership wise, a private company must have a minimum of 2 shareholders and a maximum of 50 shareholders. Whereas a public company, these are the companies that are listed on stock exchange, should have a minimum of 7 shareholders, but we don't have maximum. The maximum is infinity. We don't have maximum shareholders. We can have as long as we can. There is no maximum. And this is a popular area in the exam, and it can go up to 10 or 8 marks. The other aspect that we are going to look at, the second one, is the right to transfer shares. Right to transfer shares. The public companies have free transferable shares. Transferable shares. They can transfer their shares without any consultation. So its shares are freely transferable. Whereas for private companies, a private company are not freely transferable shares. A person wishing to do so or to transfer the shares must get permission from the shareholders, the other shareholders. So you need to be careful, because the examiner can bring, as I said, can bring up to 8 marks. So you can read those on your own, because they are very easy for you to understand them, but they are technical as per the Companies Act. But now, what I want to look at, I want to focus on a company limited by shares. In other words, I just want to focus on the limited and the unlimited companies. That's what we want to focus on: limited and unlimited companies. Now, limited companies can be limited by shares or limited by guarantee. But a company limited by share, a company limited by shares is the one in which the liability of its members is limited to the amount paid and unpaid, if any, to the shares respectively. In other words, the point here is that if you agree to form a company, and you are supposed to raise, maybe, let's say you are supposed to raise 200 million. And these are the shares that you are supposed to raise. In other words, the share value, 200 million. But when the company was starting, you were able to raise, let's say you raised 100 million at start. You raised 100 million shillings in shares, meaning there was a balance of 100 that was not paid. So when you raise the 100 million, the company, of course, will be registered. And then the balance, you keep on adding as you get the money. You can come and say, maybe during the period, you add there 50. So it means you are left with 50 million. But the balance, the total you have paid is 150 million so far. Now, what happens? These shareholders, they have brought in 150 million. And the business has been registered. At first, they brought in 100, but they added in 50 million. That makes 150. But now, when this same company gets some challenges, maybe they have challenges with creditors, and the creditors maybe come to sell off or to dissolve the company, to liquidate the company, and they sell off the company's assets, and the money, maybe the money they've gotten from the assets is not enough. Let's assume the creditors are demanding 300 million. But when they sell the company's assets, maybe they have been able to raise 250 million. Meaning there is a balance of 50 million that is not paid. Now, so since these assets, they got less cash, 250 million, but they wanted the 300. What happens? The shareholders, they must come and bring in more money to clear the debt. But the argument here is that the amount they are supposed to bring is this extra that they didn't bring, the extra 50 million. Because they were supposed to raise 200 million, but they only contributed 150, meaning they were left with 50 million extra. So the issue here is that they are only supposed to bring the 50 million. They are limited to their share, whether paid or unpaid. They paid this, but this is unpaid. So they are supposed to pay this extra 50. And that extra 50 million will be added back to make 200 million that would have been deposited. Meaning they are only limited to the shares. Even if these assets, they had sold them 200 million. Even if they had sold these assets for 200 million, but they want 300 million, it means these shareholders, they will only pull out 50 million and they will give to these guys. They get 250 million. So the 250 million will be enough, even though these guys are demanding 300 million. Because the shareholders are going to only be limited to their number of shares. In other words, their contribution is what is lost, but they don't touch their personal assets. meaning they are limited by shares. Whereas a company, unlimited company, it means if you have sold off and you've gotten, maybe they are demanding 300 million, but you've gotten the assets for 200, maybe 200 million, and your shareholding was supposed to be 200 million, but you contributed 150 million. It means you will bring back all the money. These guys, when you bring the 50, it will top up to make the shareholding of 200 million. But if it is not enough to offset the creditors' loan, the creditors, then you are supposed to bring more money because you are unlimited. In other words, you suffer the liabilities. These liabilities will go up to your personal properties to offset the liabilities of an organization. So these things are actually technical areas, and we are not supposed to put in our own things, but rather we go with what the Companies Act is saying. Company Act of 2012. So therefore, we can now try to look at the advantages and disadvantages. But those ones, I'm sure you can just explain them. I'm just going to outline them, and you'll be able to explain some of those things. So the advantages of companies. One, they have unlimited commercial life. Even if the owner dies, they still operate. It's legally treated as a separate entity, as a separate entity from its owners. In other words, whatever happens to the organization, the owners are only going to lose their shareholding, and that's enough. The other one is a limited liability. The limited liability, of course, they are not going to go to their personal assets to offset the business outstanding obligations. So let's now look at the disadvantages. Of companies. One, they have complex and expensive procedures. For winding up and information, because there are some paperwork you're supposed to have. The other thing is that they have a higher organizational and operational costs. They have to pay income tax, they have to pay workers, and they are mandatory. The last one, we can talk about the regulatory restriction. restrictions. They have some restrictions in themselves. There are certain things they are supposed to do, and there are other things they are not supposed to do. Companies, there is a format they follow for preparation of their accounts. It's not that they need it, but it is just by following the regulations. So there are certain things that the company can actually do, and there are those that they can't do as per the regulations that are available. Now from here, I want you to allow me to, so that I bring in something that is related to what we are doing, and it's all about the external environment. And after this, we can see the agency theory before we look at the goals of the firm. And I have skipped some of this because it's wide and you need to understand it very well, because it is connected to the key things. Because I've skipped the goal of the firm because it is connected to key issues as per our financial management paper. So now we want to focus on what we call the external environment, external business environment. Here we are not going to talk about plants, but we are talking about the business environment. Now, the external environment last came as a full number carrying about 8 to 10 marks in 2017. But that doesn't mean it can't come back. Therefore, we need to talk about business environment, because it's an area, if it comes in the exam, you can actually get good marks if you understand it well. But before that, I need to first give it a background. Now, because when you form your company, the company is surrounded by 2 layers. The first layer, which is the one we call the micro layer, and then a second layer. The second layer is what we call the meso layer, and the first one is the one we call the micro. There is what we call the meso layer, and this meso layer, according to economists, they name these layers as micro layer and then the meso layer. So normally, when we are talking about the micro layer, we are looking at the environment that is surrounding the company internally. In most cases, this layer is internal. And when we talk about the meso layer, we are looking at the environment surrounding the business externally, meaning the external from outside the business premises. In other words, the micro layer is basically where the business is plus its internal staff. Where the business is located and its internal staff. That's what we call the meso layer, the micro layer. However, immediately outside the business premises, there is a layer that we call the meso layer, meaning the external people. But the examiner will not ask you like that. So the question is, in the meso layer, who are there? And that's the topic for today. We are basically focusing on the external environment. And we are going to be looking at the environment outside the organization. So in the meso layer, we have people like, here, we have people like customers. We have people like customers. We have people like suppliers. We have people like the government. We also have people like competitors. All those are in the external environment. We have the customers, because in the business, when you make products, then customers must be able to come. And although you must know that the customers are also stakeholders, because we have the whole of these suppliers, customers, competitors, government, they are called stakeholders. We shall look at stakeholders as a topic of its own. But what you have to know is that customers, they are also stakeholders. And this is where we are going to find the competitors. You may decide to set up, let's say, a factory that is maybe a brewing factory, maybe for beer, for soda, whichever it may be. Maybe it's Coca-Cola or Pepsi. Then also other people are going to be doing the same thing. So those are the ones that we call the competitors. So that's the environment that we call the external environment. And that's what the economists call the meso layer. But if you reach level 3, you are going to be doing business strategy. And even for level 4, integration of knowledge. So you'll find that you'll find them more in detail. And especially for the paper for business strategy. However, the examiner there will ask you, how do you analyze the internal environment? Because the environment itself is a two-fold. We have the internal environment and the external environment. So, for internal environment, the internal environment is always analyzed using a tool called, this one we use SWOT. a SWOT tool. And more so, if you are looking at the internal environment, then we shall look at S for strength, and then W for weakness. Because the strengths and the weaknesses are applicable for the internal environment. And here, we look at the company itself. For example, the board, we look at the board in terms of how strong is the board, how weak is the board. We look at the staff, how weak are the staff and how strong are the staff. We look at things to do with internal control. In other words, we look at the internal operating system. We look at the board. Then we look at the staffs themselves. These are the people within. So we look at their strength and also look at their weaknesses. So we analyze the internal environment using the SWOT tool, but especially strength and weakness. Now, from the SWOT tool, we say that we've handled S and W. Now we are left with O and T. When you are into this O for opportunities, then T for threats, and the threats are challenges. Challenges, especially the competitors, meaning these two, opportunities and threats, analyze what we call the external environment. And I hope you've now understood my aspect here. Thus, when you are using the SWOT tool to analyze the internal environment, we are only limited to strength and weakness. That's when we limit ourselves on the strength and the weaknesses. If you are analyzing the internal environment. But now, the O and the T, the O are the opportunities. The opportunities external to the company, which the company can tap into. And then the threats. The T are the threats affecting the company, especially the competitors, the political regime, and others. Therefore, when you're using the SWOT tool, we say that the SWOT tool is a double tool, where it can be used to analyze the internal environment, and at the same time it can be used to analyze the external environment. However, when the examiner brings that question, you are going to find that the way the examiner is going to bring that question he might give it about 6 to 7 marks. So if you use opportunities and threats, the T and the O, to analyze the external environment, then you can get like 2 marks out of the 7. So in this paper, we have to find a tool, or we have to look for other tools that are going to, that we can use to analyze the external environment, that will give out more points, because this is only going to be looking at the threats and the opportunities, and those are 2 marks. But if the examiner has given it 6 to 7 marks, then we need to develop another tool that we can use to analyze the external environment. Now, there are tools that we can use. The tools that we can use the Porter's 5 forces. And because there are 5 forces, then you can pull the 5 forces to analyze the external environment. But the Porter's tool is not applicable for you here, because you are not doing strategy. And it's a tool that you will learn better when you reach on the level 3, that is business strategy. The second tool that we can use, there is what we call BCG, Boston Consulting Group. But we can also use the SWOT, but specifically O and T will be the ones that will help us to analyze the external environment. But as I told you, the problem with the SWOT tool. Now, the question is, which tool should we use? The tool to be used, the preferred tool. May I call it PESTEL as our preferred tool, because you are seeing here we have very many points, 1, 2, 3, 4, 5, 6, and there are others we can add. So this is the preferred tool that you can use, that can actually help you be able to score the marks that we need. So we need to look at the PESTEL tool, and we see what letter. We look at we open up the tool to see each of these letters is representing what. So P, so the P looks at the political environment. Or the political factors. In other words, where you are operating, what is the political situation? And the E is representing the economy. The S is representing socio-cultural. practices. The T is for technology. Then E is representing the environment. Environmental concerns. Then L is the legal environment. Or the legal factor. So that's the tool that we use to analyze the external environment. So, in other words, will you operate a business that's not legally registered? Otherwise, if you do so, then the law enforcers will actually hunt you down. In other words, for the economic environmental concerns, can you really operate a business that is causing pollution in the environment, or that is polluting the environment? And here you can also, even if they have given you, because these are 6, if they say they want 7, you can put another E for ethics. Because we know we are accountants and we have to be ethical in whatever we are doing. So this is the tool that we can use to analyze the external environment and nothing else. So we need now to look at each of these, and we see how we can deal with it. But before we look at the tool, please note that you have to note that you are not supposed to analyze the business environment with just the tool. In other words, you are not just going to explain the tool. The question is, you need to be analyzing. You look at, how can I use the political factor to actually address the concern of business? In other words, how is the political environment going to affect the business environment? So those are the things that we are going to look at. So, number 1, we said political factors or the political environment. Now, these are related to management of public affairs and their impact on the business. So it is important to have political stability. Here what we need the political stability. If at all we are to operate. So we need stability in trade. So we need to make sure that at least we can be able to trade freely. But what is important here is, how do you use this tool to analyze the business environment externally, or to analyze the external business environment? So you need to know, where is the business located? If you are going to be located in areas, say for example, South Sudan, areas of maybe Ukraine, where politically there is insecurity. So it means that is going to limit the business growth. Therefore, you need to analyze the business location to see whether the area is safe for you to carry out your business. But also, you need to be careful of the current regime in power for not showing any interest, because you need to avoid or refrain from involving yourself in activities that are against the ruling party. So the current regime in power, you have to show no interest in the affairs of the political regime in power. Otherwise, your business might be swept away. Because the way they will do it, they may just use one of the regulator to actually sweep you off. Like I heard what happened to WBS, because I heard it collapsed due to tax issues. Because the tax, you know, they can use the tax regime to actually throw you out of business. You find yourself having unnecessary taxes that you can't actually pay, and they are incurred, they are getting charges, have penalties and fines. So, as a company, you should refrain from supporting political activities that are against the ruling party. And that's what I'm intending to communicate to you. So the political factor is going to be a problem if at all you involve yourself in activities that are against the ruling party. Number two, we have economic factors or the economy. You need to analyze the economic factors. So you need to analyze it. Like these days, it's not good to throw in your money in any business before you do analysis, or you analyze carefully the economy that you are investing in. Like in terms of the inflation, what are the inflation rates? Because you find that the inflation is high and you can't invest. For example, when you look at countries like Zimbabwe, where the inflation rate is high, if you look at countries like ours, Uganda, the interest rates are high, even the taxes are so high. And analyzing the things to do with the interest rates, the inflation rates, that's all to do with. Of course, we also have to look at the purchasing power. Because you may be in times, maybe in times of elections, because now we are proceeding to elections, you find that the purchasing power is low. People have no money. So it is very important for you to analyze the economic factors. So these are some of the reasons as why you find those people with money and they don't want actually to do investment because of poor economic factors. And they are not even sure of how it will end. Because sometimes it may actually worsen. Just like Lewau told you, towards election times, people fear to invest because they don't actually know what will be the outcome. So you look at things to do with the purchasing power, whether people actually have the money to actually buy the products that you want to produce. Then the other thing, the third point is social factors. The social factor. As a business person, you need to be mindful of the cultural events in areas of operation. For example, it will be hard to open up a piggery business in areas that is mostly occupied by Muslim people. So it will be hard. Therefore, you need to be mindful of the community. If you want to set up maybe a company that is processing biscuits, then you have to look at the demography in terms of the age rates, the age limits that are there young people that are actually going to buy, because most of these old guys, they don't actually take those things. So you have to look at the demography. So before you set up, you have to make sure that you have analyzed the external behaviors. The other factor is the technological factor. Now, no company for these days can actually survive without implementing technology. Because even right now on this same YouTube channel, in these lectures that we are providing, if you are not having, let's say, a laptop or a smartphone, then it will be hard for you to actually even have access to these tutorials. That is by default. So you must be having one, either a laptop or a smartphone, to be able to access these tutorials. Therefore, if you want to succeed in business, you have to take note of this same point. But the other thing you need to note is that some of these points we give, you may be given a case and you are the one to just uproot those from the case. But let's just look at all of them. The other one, we have the legal environment or the legal factor. We said these days it is possible for you to run a business unless your legal documents are clear. And the company is actually registered, or the business is registered, either as a partnership, a sole proprietor, or a company. And the concern these days is that you must be registered with URSB, Uganda Registration Service Board, Bureau. Uganda Registration Service Bureau. And immediately you register with it, you register with URSB, then you find yourself have to get a TIN number, because URA will just come in there and then. So I hope you get my point. And it's clearly impossible for you to run an illegal business these days in Uganda. So look at the other is the environment factor. The environment, in terms of the climate and all that. Nowadays, we are seeing that the NEMA is actually doing some activities. The National Environment Management Authority is the one that is responsible for wetlands and all that. So you find that they are trying to come after those people that are doing business in wetlands, in wetland areas. They are demolishing their properties, like the business buildings and others. So these activities, intend to avoid pollution of the environment and other climate challenges. And finally, as I said, we are accountants. We have to look at ethics. So if you are an accountant, you are supposed to remain ethical, and you should have nothing to do with bribes, corruption. Although these are things we just study, but other things actually, guys out there, they are just doing, they are just corrupt. But these are the things that we are supposed to look at. Conflict of interest, etc. There are other things that we shouldn't do as accountants. So therefore, ethics matters. So by using the PESTEL tool, we are able to analyze the external environment. And I hope that's clear. So the other thing that we want to look at, let's now go to another topic called ethics. We look at ethics in detail. Ethics in financial management. Now, let me talk about ethics. Because ethics is very important aspect. It is an important issue. And we need to be careful on this section about ethics, because it appears in most of the exam sittings. It appears in most of the exam sittings. So it's a popular question, and it's an area we must be able to capture the good marks. So you as a finance manager, you are supposed to promote ethical practices. In other words, you are not supposed to promote unethical practices in the business. And those ethical practices, they are not many. However, you'll hear me talking about ethical and unethical issues. But I prefer to start it from the unethical point of view. I prefer to start from the unethical point of view. We first look at the unethical behaviors or issues, and then we look at the other aspects. Number one, we have bribery. You are not supposed to seek bribes in order to offer a service, and I hope that is okay. The other one is corruption. The third one is money laundering. The fourth one, we have inside dealing. So here I call it insider dealing. Number 5, we have fraud. So number 6, we always say others. In other words, from here we have issues to do with pollution or waste management. So those are some of the issues that we may look at. Therefore, if you are a company and you are a finance manager, you are not, and you find yourself that you are not providing money to handle issues to do with pollution or waste management, then you just know you are corrupt. Now, let's get the examination perspective. Examination issues. Now, the examiner will bring a case. It will be a scenario or a case. If you are lucky, in the case, he will mention the unethical issues or practices. So, the examiner will be direct and ask you what are the unethical issues in the scenario. So he will be direct and he will ask you the unethical issues in the case or in the scenario. So the rule of the thumb is that you should try as much as possible to make it practical. When you're answering this question, you should be practical. In other words, being practical, it means you are linking the answers to the case. However, you have to dictate how many marks the examiner has put. If the question has, let's say, 6 marks, and in the case you are seeing only 2 or 3 marks or points, then you have to first pull out these 3 that are in the case and try to show him that as you have mentioned these in the case, it is said that this and this is doing ABC. And that's the way the examiner is going to feel happy to see that you are referring to the case, which means that you have understood what you are supposed to do. So because in the case there is 1 or 2 unethical practices, but the marks are up to 6, then you can add others. You can add others as we talked about, corruption, libel, as we talked about them. So let's try to explain the unethical issues as we outlined them, because we need to have an understanding of those issues that we have highlighted. Now, we said bribery and corruption. Now, these two are similar, so avoid starting with them when you are answering the question. In the case whether there is one case or one unethical issue, let's say there is what we call insider dealing. Then just know that the insider dealing, it results to corruption. Therefore, when in the case there is insider dealing or insider dealing, and you have answered it very well, then you can go down after you have brought all the issues, and then you talk about the issue of corruption. At the end, depending on how many marks the examiner has located that question. However, never talk about a case or a point that is not near or close to the case in the question. And most of these points, like things to do with, let's say, money laundering, things to do with insider dealing, most of these points, they are either mentioned in the case or they are not there. So there are other issues that you can talk about. We have issues to do with the window dressing, or what we call creative accounting. It's also an ethical issue, meaning doctoring accounts or misrepresentation of facts. There are so many other unethical practices. So we've now known how we can handle the examination aspect. So let's look at the unethical issues in details. Issues. Therefore, I'm talking about ethics. I'm talking about things that are not acceptable. They are not acceptable. Or things that are not morally right. Not morally right. And those are the ones that we call the unethical issues, as we outlined them. But now we can try to look at some of them in details. We looked at one, money laundering. Now, money laundering is the practice of using illegal money in other words, money got from unknown sources. The money is there and it has been introduced, let's say in the company, but we don't actually know where it came from. So illegal money or money that came from unknown sources, if not checked, it can cause problems to the economy, either politically or in any other way possible. For example, someone can obtain money from, let's say, the donors. You can get money from the donors or these NGOs. But you find that this money is not declared to the organization. Like what you saw what happened to FDC. We had that the Secretary General received money into the political part of FDC but it wasn't disclosed where it came from. And that resulted into conflicts among the party members. And we all know what happened to FDC at that time. So, if that was a company, the finance manager will not be allowed to promote money laundering in the organization. However, when you do auditing and ethics, it is a paper on level 2 and level 3 possibly. Then from there you'll be able to analyze, to go into deep understanding of what money laundering is. But here our issue is just to understand. We don't look at the details. We just need you to be aware that money laundering is not acceptable and it shouldn't be promoted as a finance manager, and that's all we need from you. The second point, we can talk about inside dealing, or what we call the insider dealing. For example, inside dealing is something mostly done under these commercial banks. Commercial banks have those funny stories of insider dealing, because you find that these directors get people's savings and they lend the people's savings to themselves beyond the regulations. And when people come for their money, then you find that the money is not actually there. So insider dealing is not a good practice. But what we have to understand is basically how it happens. And that's how we can understand it better. However, how I teach it here is the same way I teach it in advanced financial management. Although for them they bring mainly detailed cases and you'll be required to analyze the unethical issues available in that case. So when you look at the advanced financial management paper, it brings out some of these things, because for it brings a very detailed case, and you can be able to get some of those things. If maybe you can try to download October 2021 for advanced, the question paper for advanced financial management, October 2021, there is a case to do with insider dealing. Insider dealing, I think, with the conflict of interest, but it's an advanced finance management paper. Although the same way we studied it, we studied that here is the same way we studied from the other side. And sometimes from advanced financial management, we don't actually study them. We just take assumption that we covered them at financial management. Therefore, insider dealing is where you use the information private to you or private to the company for your own benefit. You use private information for personal benefits. In other words, you stand to gain. You give out the information and they give you something. So, in other words, you just provide information just to enrich yourself. For example, if let's say you are the CFO of let's say MTN Uganda, and you know that this company is making good money, and since this company is making good money, you've seen that they are now going to sell shares to the public. Then you go ahead and tell your brothers and sisters and other relatives to come and buy shares, when you know that after maybe 1 year, the market value of the shares will increase. Because you are the one running the company, so you know what is available in the in the organization, because you are there. Meaning you are using the information you know and you are giving it to your relatives to actually come and benefit. So that's what we call insider dealing or inside dealing. And the whole point here is that promoting inside dealing or insider dealing is unethical. That's what we are trying to get from this. The other, we can talk about conflict of interest. Conflict of interest is just a situation where someone who has to make a decision in an official capacity stands to benefit personally from the decision. You find someone, instead of other people saying we do this, the other person is just saying we do this. So you're just contrary to what other people are actually saying. And there are no justifiable reasons as to why you are actually taking the opposite side. So you stand to gain because you know what you will be promoting. The other issue is we can talk about fraud, bribery, corruption, etc. There are other things. Now, the question, the way it's examined, once you know these unethical issues, in the exam, you should go with the general points as we've given them. The unethical practices: bribery, corruption, fraud, money laundering, insider dealing, and others like window dressing, misrepresentation of facts, tax evasion, etc. There are others. And those are the things you will see in the case. So once you have these unethical issues, then you can look at the case on how is the examiner examining the question. One way, because it's going to be a two-way. How they are going to examine it is going to be a two-way. Now, the one way, the examiner is going to bring a general question. That's one way, where the examiner is going to bring a general question, and therefore it's general in nature. Then you should answer depending on what the marks they have given. Give corruption, bribery, etc. But he could bring a case. It would be a case question. Or a question that is specific to the issue. They may bring a case that is specific to, let's say, insider dealing. Then you have to pick the practice that are there in the case and nothing else. And I hope that's okay. But also the examiner might not be direct, but he could give you, you'll find that maybe the examiner is not bringing a case, is not bringing a general question, but is just dodging you. So the examiner will be dodging you, but he will also be giving you scenarios. In other words, he could be showing you some aspects that are leading to unethical practices. In other words, those are the ones that we call the temptations. The examiner is tempting to mention that there is unethical behaviors, temptations to undertake decision that are morally questionable. You may find that the examiner is actually trying to dodge and is giving you situations that could actually lead to unethical behaviors or that are not morally right. So those are the things that we are going to look at. Number one, he will tell you that the accountant has delay in payment of suppliers without any justification as to why. So you may find that he may give you a scenario that the accountant has delayed to pay maybe dividends, even though the board had approved the dividends, and there is no justifiable reason as to why he delayed to pay the dividends. So this alone can lead to one, bribery or corruption. Because if you can't give a reason as to why you are delaying, then it means you are just waiting for them to give you something before you make the payment. Of course, I also understand, but I understand the situation where the accountant may be trying to delay, maybe the money is not there. But the money is there and it has been approved, but the person is not actually making the payment. So I hope you understand the argument, because things will not be direct as you think they may be. The other idea, the examiner might also tell you that the supplier made their supplies maybe 2 months back. But the accountant has delayed their payment. So the accountant has delayed to pay the suppliers, and there is no justifiable reason as to why he's holding their payment. So I don't want you to take it in the other aspect, because I know there is the other point where you, the accountant, you are saying, I can delay the paying suppliers because there is no cash flow in the business. But you see, here the examiner is telling you that there is no justifiable reasons as to why you are holding the payment, and that means you are looking for bribes. So when he asks for the unethical practices, then you can say that owing to the fact that he has delayed to pay the suppliers, then is promoting corruption or bribery. since there are no justifiable reasons as to why is delaying. You may find that the examiner is talking about cases to do with the destruction of environment, maybe destroying the environment or polluting the environment, cases to do with the environment. So there could be a case of destroying the environment. There could be cases of using relatives at work. Maybe instead of these guys, instead of giving the people, the qualified people, they are just bringing in their relatives to come and work. There could be issues of nepotism. There are issues to do with emphasizing on substance over form, that kind of stuff. You may find yourself, people are saying this is right for you, are saying the other one, because you know what you are, you know what you are promoting. So this is actually the softer part where the examiner can actually use by not being direct. So we need to be careful on that. But let's look at what could be or why is it good for companies to operate ethically or to do things in the right way, things that are morally right. So we look at the importance of operating ethically. Importances of operating ethically. One, it helps the firm to avoid fines and legal fees. So for example, if you're a finance manager who has been doing creative accounting, you are doing tax evasion, misrepresentation of accounts in order to avoid maybe paying taxes, which is unethical, and once discovered, then you'll pay higher values in terms of fines and legal charges. Secondly, it promotes public trust. Operating ethically promotes public trust. And therefore, as a company, you are expected to live longer. So you need customer loyalty. So the customer will keep on buying your products as long as you do what is right. If in terms of quantities, you are making the right measurements, the weights are okay, the pricing is okay, even the quality, then you expect that customers are actually going to be coming in, and that will create customer loyalty. Also, promoting customer loyalty is also another point. Customer loyalty, because customers, they become loyal, and they, in the end, you are going to be getting more money. Then the other one, it also attracts employees to work for the organization, because everyone is looking for the company that can actually operate ethically. So good corporate behavior tends to attract the best talent to work for the organization. Now, we need now to look at situation to do with mitigation. How can we solve the unethical issues? Now, this is our last item that we can look at. The examiner will bring a question on ethics. This is what is going to happen. The examiner will bring a question on ethics where it's a two question in one. It's two in one, where he wants you to identify the unethical practices in the case, and then you tell him how you will mitigate those unethical issues identified. So, for example, if you've seen that there is bribery or corruption in the case, those are the unethical issues. So you've seen them, then the question is, how are you going to solve those unethical issues that you've seen in the case? So we are going to look at the different ways on how unethical issues can be mitigated. So, ways to mitigate unethical issues. So, there are two ways of answering this question. If the question is asking for ways to mitigate, of course you can't mitigate what you have not seen in the case. So there are two ways. It's a two-way also. One, we can decide that maybe we first identify the unethical issues. We identify the cases or the issues, the unethical practices in the case, and then quickly give the solution. You identify one case, then you give the solution. The other way is to make sure you first identify all the ethical issues. You identify all the cases, and then at the end you give general solutions. Because we say these things, they are actually related. So you identify the unethical practices, maybe one or two that you've seen in the case, then you give. After that, you come back, then you address that you showed that these can be mitigated in these following ways. Then you start highlighting those cases. As I said, after you come up with those unethical issues, it's where now you can say, however, the above unethical issues can be mitigated using the following practices. Now, one, we are saying refocus compensation plans towards meeting the other stakeholders' objectives. So we have to refocus the compensation plans towards achieving the objective of other stakeholders other than our personal objectives in order to make more money for the business. Because if we focus on satisfying every person's interest as we the people who are serving the organization, then we can be able to make more money for the business and mitigate those unethical issues. Because by looking at what these other interested groups want and we fulfill them, it will actually mitigate the issues. Secondly, promoting and designing codes of conduct. So, we recommend also to promote and design codes of conduct, like how someone is supposed to behave. And once you know that the code of conduct is this, then you are not supposed to promote unethical practices. Because when you are joining some organizations, they take you through the orientation week and they give you what they follow as far as the organization is concerned. So you come to know what the do's and don'ts of that organization. So at that point, if we promote those codes of conduct, we are not going to be able to have unethical issues in place. The other one is improve communication across board. We can also improve communication across board because some of these things happen in companies because the management, they actually don't know, or they happen to some people and they don't actually know how to actually handle certain things. And it is possible for something to happen and the board doesn't actually know. So we can mitigate the issues unethical practices by improving communication across the board so that it is not a complicated area and anyone can actually be knowing what's going on in an organization. The other one is we can join and be part of, join and become members of associations. So you join and you become members of associations that emphasize ethical decision making, like the Institute of Certified Public Accountants of Uganda. So if you are a member, you find that you are going to operate ethically because you have someone who is regulating you. And for any instance that you make maybe fraud, you may find that the institute will actually withhold your certificate. They can withdraw your certificate, and now, so by fearing that, or by becoming part of an organization or an institution, an association, it helps you to avoid some of those unethical practices. So we shall elaborate more on these things when it comes to revision classes, when we are going to be talking about the different cases that are within our different past papers that we already have. Therefore, I'm going to conclude this. We can actually look at a practical question. There is a practical question that you can download, go through it, and see what the cases there were or what they were talking about. We have November 2017, question 2. And there is also question 4A, part A, of November 2018. So those are the things that we may actually, you can download it, have a look at what the case was, how it was set, then we can be able to talk about some of those things when we go to our revision classes. So I want us to end our lecture here. The things that we didn't complete, they are the ones that we shall look at when we go to the next lecture. Thank you for watching. Endeavor to subscribe. Make sure you join the Telegram channel, download the course materials, and follow along. That's all for today. Until we meet again.